Okay.
Okay, everybody, this is Patrick Zielbauer from Infinity Futures in Chicago, Illinois. Welcome. It is 3:30 on Thursday, February 9th. I'm going to go through some risk stuff here real quick, and then we'll just get right into it. So thanks, everybody, for coming. Trading futures, options on futures, and retail off-exchange foreign currency transactions involve substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. So folks, just be aware, only fund a futures account with risk capital. You guys have seen this disclaimer everywhere. Obviously, it's because it's required, but it's also very important. Futures trading is risky. Be careful with things like day trade margin. Even if you use the regular overnight margin per contract, for example, when you're trading, you're still using a lot of leverage, in some cases like 20 or 30 to 1 leverage. So be very conscious of that. If you're not sure what this means, then you probably owe it to yourself to have a conversation with your rep in our office here, an objective one about risk. Everybody here has a representative, whether you have an account with us or not. So please feel free to reach out to that person. If you don't know who it is, you can just reply to any of the email you get from Infinity or send an email to trade@infinityfutures.com, and that will go to my boss, who will yell at your representative for not making himself or herself known to you properly. All right, so thanks everybody for coming. Again, my name is Patrick Zielbauer. I am an AP or associated person of Infinity Futures. I've been working here for nearly 13 years. Seen a lot of things in my time at Infinity. And one of the things that you obviously know that we do here at Infinity is from time to time we do online events, aka webinars, with valued partners of ours, and we don't have that many of those partners. We are unlike a lot of our competitors in our business. We do select very carefully the groups that we work with, and we select only those who we believe who might be able to add some value, to our customers' experience and help to protect them. So that's what we're doing here today with Shane. Shane has been from the Rational Trader. Let me pull up his webinar registration page here. Shane has been a client of mine here at Infinity for many, many, many years. I don't know how many years, but a long, long, long time. And he has a educational service. He has a trading room. He has some really nice stuff that he's done with Sierra Chart. For those of you who are unfamiliar, Infinity offers and supports a charting program called Sierra Chart. It's an excellent front-end program for charting. It's basically free for people who do a tiny, tiny bit of trading, 10-round turns every 30 days. Most of you have no trouble achieving that. Even if you do not do that sort of volume, you'd only be paying $20 a month for Sierra, which is half of what Sierra charges on their own. So very inexpensive place to maintain an account, even if you're, even very modestly active. If you're even moderately active, there's almost nothing better. Just a little bit about Shane and the how this whole thing sort of developed. Shane approached us a long time ago with some ideas about what he was trying to make known out there, and some of the insight he wanted to share with people. The word order flow is one of the reasons why there's so many people on this webinar right now compared to some of the other ones we do. It's a hot topic. It gets the most clicks, the most replies. The second we put the word order flow into an email, it's like magic. Everybody responds. It's a very interesting phenomenon. The educational market in the futures business is cyclical, just like the market itself. We see sometimes people latch onto these terms, and they just become buzzwords, and we don't really know what they mean, or how to properly use them, or how to talk about them, or the risks of relying on them, and so on. Shane was one of the first people who I found didn't just use the word or the phrase order flow as like a sales tool. He actively incorporates what I believe to be the most important part of trading based on my knowledge of my customers, and that is the physiological response to risk that cannot be practiced in a simulator or any place else. And I might have even stolen that term from him. I'm sure someone else has said that, but he has definitely used that phrase before, and it really rang true for me because I see my clients go through this indicator cycle, and it's madness. It's really getting out of control. And one of the things that Shane really does is help people understand how to properly deal with the physiological response to risk in the context of this type of trading. And I just really think it's a valuable added service, and not many people focus on that. So that's one of the reasons why I really like putting Shane in front of my customers who struggle with this. I think it'll be an interesting event. We obviously thank Shane for taking the time taking the time out of his day to do this event with us here. We very much appreciate that. We know he's really busy. He's got a lot on his plate, and we're so glad he's here. So thanks everybody for coming. Shane, thank you for making an appearance here. We are recording the webinar, so barring any unforeseen circumstance, we should have it up on YouTube, by tomorrow sometime. Thank you again. And Shane, take it away. Appreciate your time. Thank you.
Thank you, Patrick. Let's do an audio test. Audio test 1, 2, 3, 4. Can you hear me? I guess I need to go.
Sounds good.
Okay, so Patrick, thank you for that introduction. In particular, I liked the discussion about the natural, physiological or biological reaction to risk. We're going to talk about that some today. Though we are going to talk about order flow, and we're going to spend most of our time actually looking at the charts. And in particular, I want to discuss the key aspect of order flow that I think is important. And so we're going to get past the buzzword. I kind of like what you said there about this is not just the latest trading buzzword. This is really digging in to understand what do we mean when we say order flow, and what are we using, and how are we applying it. In this case today, we're going to take order flow and understand what it's sort of how it works, and then apply that in a way that helps us understand the momentum. And momentum actually may not be the right term. Strength might be a better term. So you guys decide for yourself. By the time we're done here, you should have a clear understanding of exactly how I'm doing this. And
Shane, you should see a pop-up there asking you. Yeah, there you go. Now you got the screen.
All right.
You're good.
Okay, so let's see. We can see the screen, yes or no?
Yep, we got it.
All right, my error then for not doing that. I thought you switched me over.
Oh, no problem.
All right, so that's okay. You just missed this little image, which you can look at now. But to continue, we're gonna focus on order flow, what it is, in nuts and bolts. We're going to talk a little bit about biological response to risk. What makes trading truly difficult? All right. So let's get started. Next slide is, let's go to the charts. All right, so let's get oriented here. Okay, this is Sierra chart you're looking at, and this is the NASDAQ, and this is for yesterday, February 8th, 2017. All right. I'm showing the times you see across the bottom are Pacific time. I'm on the West Coast. And you've got some vertical lines. This line over here on the left is the open, 6:30 in the morning, 9:30 Eastern. And right here is news. This blue vertical line is 7 o'clock, a time when there's often news. So I just have the software plot it automatically for me. The gray areas represent blackout periods around the stock market open and the news. It's very, very, very wise to be careful during periods of extra volatility, and news events are one of those. So is the open. The horizontal lines are just sort of key levels that I have the software plot for me automatically. Again, Sierra chart is very powerful, makes it very easy to do this. So the orange line is the open, a very important price, and the purple line is yesterday's close, or the previous trading day's close. So in this case, it would be Tuesday's close. It's actually not the close. It's the last traded price at the end of the session. So it might be a little bit different than the settlement price. The white line at the top here is the overnight high, Globex high. And then another white line here just below the open yesterday was the Globex low, so the overnight low. And below that, the previous day's low. And then the software is drawing the actual session low as it occurs. Okay. Let's see. I got to check to make sure that I don't have any questions here. It is full screen, Brad. The close is, what time do I consider the close is the question. It's 15 minutes, the electronic close, so 4:45. I'm sorry, 4:15 Eastern. So the cash session closes at 4 Eastern. All right, so what you're looking at is a range bar chart of the NASDAQ, and it has 10-tick high bars. If you're not sure what a range bar is, then you'll need to Google that. It's out of scope for today's discussion. And what I want you to do is just use the awesome pattern recognition capability of your human brain. And what do you see? There's bright red outlines and there's bright green outlines. These represent momentum in the market as I'm calculating it. And it should be what I would think would jump out at you is that when you see reds, the market's going down, right? And when you see greens, the market's going up. That's an interesting bar we can discuss in a moment. All right. So the first thing to think about is, we're going to talk about exactly how I'm calculating that in a minute. But look in particular at that bar and that bar. All right, that's a momentum short bar. But certainly the market doesn't have downward momentum if you look at that using any other momentum indicator anywhere. Okay, and by the same token, if you look at this bar here, that's showing momentum long or strength long, depending upon the term we decide to use. All right, very, very quickly after that turn, actually. Okay, and so the very first thing that I like people to think about is, if you're trading and you find yourself getting whacked a lot, all right, one thing that's very easy to do is make a rule. You don't go short unless you see bright red bars, and you don't go long unless you see greens. And this is true particularly for those of us that like to find the top or find the bottom. You're looking for the turn. And this is one way to very easily sort of keep you on the right side of the market, keep you grounded. Okay. Questions? My time is Pacific. Yes, Patrick. Carlos is asking a question about. I don't actually understand your question, Carlos. I guess you'll have to ask it again. I trade the morning session. I don't trade the close. So, what happens after, at the beginning of the doldrums and afterwards, I don't really notice. I don't really care about it. Most opportunity in the market is in the first hour, by far, when you look at the data, and then the next hour, the second hour is the next most opportunity, though it drops off dramatically, and then there's another spike in the last 30 minutes. So if you're going to focus your time on the market, focus on the first hour, then the second hour, and that's it. All right, let's talk about how I'm calculating this and why. Actually, let's look at today. Hold on. Here's today, and all I'm doing is showing you the momentum signal. That's it, nothing else. Okay. It was a slow, quiet, choppy, kind of ugly morning, I thought. It was sideways, 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 and then finally we get sort of a nice signal to get long right there. I like that signal. I missed it. I'd stopped trading for the day, but it's right there. I hope we can get to the formal signal by the time we're done here today. Again, bright greens. So I'm waiting. If you just look at this from a pullback perspective, here's market advances, pulls back. When is the pullback done? I don't know. It's done now. And it goes bright green. It's very, very, very reasonable time to enter as soon as that bar turns bright green. Okay, you don't have to wait for it to close even on a pullback. All right, let's talk about what's going on underneath the covers here. Okay, the formal chart I use looks like this. Okay, this has a wave volume on the bottom, some custom wave volume signals in the middle, and then order flow signals and the momentum outlines we've been talking about. The reason that that particular signal that I just pointed out here looks so sweet to me is because I also have this little lavender triangle right there, which is a failed reversal signal in the direction of the trend. So a very nice looking signal. The rest of the day I didn't do anything. It was too quiet. All right, so let's talk about order flow. To do that, I need to bring up a dome so you can look at, which I snapped earlier today. This is the NASDAQ. Okay, this should be familiar to you if you're an Infinity customer. This is their ladder. And you have a price in the middle, and you have the ask quantity on the right in the kind of that salmon color, and bid quantities on the left. Now what this means is that on the right hand side, this side here, these are people who have limit orders to sell in the market. That's the ask or the offer. Okay, so right now at 51.1850 there are 111 contracts on offer. These people are saying, if you're willing to buy from me at 52.1850, I'm willing to sell to you. Okay, these people are waiting for the market to come up to them to fill them. Okay, and by the same token, on the other side is the bids. All right, so if we look at, say, right here, 52.16 even, there's 94 contracts on bid. I'm willing to buy from you if you'll sell to me at 52.16 is what that says. 94 contracts at this point in time, this particular millisecond. If you go closer and closer and closer to where these meet, you can see that the current bid ask is 52.17 and 52.1725. Okay, there's 24 contracts on offer at .25, and there's 11 at even. 11 on bid. What has to happen for the next trade to occur? This is the most important technical question I'm going to ask you today. What has to happen next? For the next trade to occur, what has to happen? Currently, there's 24 contracts on offer at .25, and there's 11 on bid at 0. Those are limit orders waiting for someone to fill them. What has to happen in order for a trade to occur? Yes, Jay, you're exactly right. A market order has to be placed. Someone has to say, I'm willing to pay more. I'm willing to pay you $17.25 for your contracts. Alternatively, someone says, I'm willing to sell for less. I'll sell to you for $52.17, but it has to be a market order, and this is important. There's no way two limit orders can meet. Everything you see in the dome is a limit order waiting for a buyer or a seller, but in order for the market to move, someone has to aggressively state, I'm willing to pay more, or I'm willing to accept less. Limit orders do not turn into market orders. A limit order is a limit order. If there is a market order to fill it, then it'll match. The only way for a trade to occur now is for someone to be aggressive one way or the other. This is the key thing. For the market to go up to 52.1725, some trader somewhere in the world has to say, I'm willing to pay you that price. And when that trade executes, the market will tick up. And in fact, if a bunch of people say it, we'll consume all 24 that are sitting there, and we'll tick up even higher, assuming no other limit orders come in while that's happening. Okay? So if just by way of example, to help explain how it works, let's say that no new limit orders come in at all, and someone places an order for 100 contracts to buy at the market. That person's going to get filled. 24 of those contracts will get filled at 52.1725, 46 more at 57.15, and the remainder at 17.75. The market will tick up three spots. Okay. Aggressive buying is occurring as this happens. What's important to note here is that we can tell if for every trade that occurs, we can tell if the person was getting aggressive in buying or getting aggressive in selling. Okay? The software tracks where the trade occurred. So right now, at this point in time, as you're looking at it, the bid ask is 17.25 and 17 even. If the next trade occurs at 17.25, the software notes that, oh look, that was an offer, that was an order that went off at the ask. That's aggressive buying. Okay, so the software will track ask volume and bid volume is what it's called. So if there's 100 contracts that go off at a price, a split between that price will be how many went off at the ask and how many went off at the bid. Okay, now we can look at that on a chart. Okay, actually before I go, let's make sure we don't have any questions. This is really important that you understand this. This is the key to understanding what order flow means. The only way for the market to go up is that a buyer was aggressive and was willing to pay more. The only way for the market to go down is the seller was aggressive and was willing to accept less. That's it. There's no other way for the market to go up or down. Okay? So by tracking who's being aggressive and who's being in which direction, we can tell some interesting things. All right, so let's look at a different chart here. This chart is also a NASDAQ chart, but it shows bars that are drawn every 15 seconds. So this is a time chart. 15 seconds of time each bar. So no matter what happens, whether a million trades occur or 0 trades occur, you're going to get a bar every 15 seconds. Okay? That bar has a volume associated with it. We know how many trades occurred in that 15-second period of time. Okay? And because the software is awesome, we can tell how many of those trades occurred at the ask, aggressively, over here, and how many occurred at the bid, aggressively short. Okay? So, for instance, if I have a bar here and there were 100 trades that went off and 60 of them were aggressive buys, 60 of them went off at the ask, then the number here for the ask volume will be 60 and the number for the bid volume will be 40. In this case, in my example here, the buyers were more aggressive to the tune of 20 contracts, right? 60 went off aggressively long, 40 went off aggressively short. Okay? We can also tell the software, look, I don't really care how many went off aggressively long versus aggressively short. I just care about the difference. So subtract for me the bid volume, the aggressively short volume, from the ask volume, the aggressively long volume. And that's what's being charted down here. And that's what's being charted down here. Okay, these blue bars are the difference between the bid volume and the ask volume. Okay, so for every bar I can tell you, you can tell just by looking at it, who is being aggressive in this bar. This bar here, this bar right here, a lot more buyers than sellers. So when you hear me say buyers, what I mean is aggressive buyers. A lot more sellers, what I mean is aggressive sellers. Because every trade has a buyer and a seller, that has to be. But what's important is who's being aggressive, who was willing to pay more or accept less. And this is the crux, the key to order flow. Who's being aggressive and what is price doing as a result. Okay? So there's 4 conditions. If the buyers are being aggressive and price is going up, that's momentum long. If the sellers are being aggressive and price is going down, that's momentum short. But there's something else that's really curious. If the buyers are being aggressive and price is not going up, that tells us something different. If the buyers are being aggressive, we see lots of trades going off at the ask, aggressive buying, price should be going up, right? If it's not, it means sellers are pumping in extra limit orders, absorbing all that buying, and that's called absorption. We're going to use these concepts of momentum and absorption to understand, to read what's happening in the market. Let me check questions. So Doug is asking a question about diagonal bid ask. Okay. Not in this chart, Doug. And in fact, to answer this question will take more time than we have today. So when we're done here with this webinar, I'm going to invite you to a tutorial that's free for 2 hours. That's the kind of question we will have the time to delve into. All right, the diagonal bid ask. When I display that information on this kind of chart, I display it diagonally, yes. Okay, but for this calculation, it doesn't matter. What you're describing is a display issue. All I want to know is, in this bar, what went off at the bid and the ask. This bar has a lot of price levels in it, or it could have a lot. For each trade that transacted, did it go off at the bid or did it go off at the ask? If it went off at the ask, those are aggressive buys. If it went off at the bid, that's aggressive selling. Okay? And just give me the difference. And that's what you see here. These charts, these bars are the difference. So if it's above zero, that's aggressive buying in that bar on balance. If it's below zero, that's aggressive selling. Okay? It's that simple. But how do you use the information is the question. 15 seconds is far too noisy. What we want is a larger view. And that's what this blue line here is telling us. The light blue, the cyan colored line, is a moving average of the difference. Okay? And so what happens is when you see what I'm doing, okay, this is what I'm doing. When I see this moving average cross above that threshold here, that green line, that's my indication that I've got not just an instant of time where the buyers are being aggressive, but I don't want to say trend. Trend's not the right term. I'm seeing enough instances of aggressive buying that I'm seeing strength now in that direction. Okay, that's a 15-second chart. It's a 15-period moving average, so it's just under 4 minutes of time. Now, what I do is I take this case right here where you see the moving average of this difference has crossed above this threshold, and when it does, I plot that on the range bar chart as a bright green outline, and the reverse, a bright red outline for when it crosses below the lower threshold. Okay, and so what we're getting here is you're getting a range bar chart, which is a very clean view of price action, and we're adding to it this time-based order flow momentum signal. And you put the two together and you can see that there's a lot of power here. Okay, and so one of the very first things I do is look at the price action itself. Okay, the signal we saw here today, this is a very basic pullback signal, right? Advance, retrace, advance, retrace. Okay, so you can see actually there's strength after the pullback. This is actually interesting because it's also a pullback to the open, a place where the market often will bounce. All right, the market was really slow and quiet today. I didn't do anything here. And then advance and pull back again, and here very, very clean. As soon as that bar goes bright green, that's a very reasonable long entry, okay, or a long signal. The entry is handled a little bit differently, okay. That's for the pullback. For the turns, it's handled a little bit differently. The turn, when you think about it for a moment, let's look at was this today? Let's look at yesterday. Well, actually, this is maybe not the best example because when you look at it here, including prior to the open, this very much looks like the market's going down, right? And so this is a pullback here. Nevertheless, I treated this as if I needed a turn signal. Let me get rid of that. And so, because when you look at it from here, this looks kind of sideways. So if the market's going sideways, I either don't want to do anything or I want a really strong signal. The turn here is a good example. So let's use that as an example to turn long. When the market is moving in a direction, it tends to stay in that direction, okay? And so the likelihood that it's going to turn is less than the likelihood it's going to continue in that way. So what I require is I need to see price reverse. And once I see price reverse, then I want to see this order flow momentum we're discussing here, okay? And so you actually see that right here. Let me go over to here. This is Wednesday. Yeah. There's a lot on this screen, so you'd have to come to the tutorial to understand what's happening here. But you'll notice right here, let me zoom in a little bit bigger here. This is the same point in time. You'll notice a couple things here that we're focusing on right here, okay? You're seeing momentum, short momentum, right? And then you get the bar closing up. You get it here too, so this is a little, you're already a little suspicious. The market should not really be the bar shouldn't be closing up if there's a lot of selling, okay? Nonetheless, things are noisy. But here you get that blue bar. That bright blue bar means big buying. Okay, this is another order flow, another example of order flow where we are looking at the amount of buying in that bar, the amount of aggressive buying, and comparing it to the amount of buying I've seen in the previous bars. And if it's more than 50%, I consider that big buying. Okay, and so what's interesting about that particular bar, keep in mind it looks like this in real time. It's just like that. That looks like the market's falling, right? There's no reason for you to think that I want to get long here. And yet that's the low right there. Now we can't tell that yet, but it's useful to see. Look, I've got big buying as I'm setting a new low. This is an indication that if you're thinking about shorting, be careful, because you should not see big buying if the market's falling. Okay, I didn't describe the technical component behind how I'm calculating big buying, but I'll do that for you at the tutorial. All right, more big buying, and I'm no longer showing short momentum. There's no bright red outline on that bar. Bright green outline, and you see this little. Might be a little hard to see, particularly in the broadcast. There's a little blue dot right there. It's small because after a while you don't need it. That's a reversal pattern. So the price action is showing that I've turned enough that that might be the bottom. That's what that's saying. Pay attention. That might be the bottom. It's not enough for me to take a trade, but it's enough to go, look, I've turned enough that I might be actually not going down anymore. Okay, and I'm showing momentum long. Next bar, also momentum long, and you see that star? That star is a signal that says I've got two things now, a reversal pattern, a price action reversal pattern, and momentum in that direction of that reversal, okay? This is one of the most difficult cases to trade actually, because that reversal pattern is 3 bars and you're very far away from the turn by the time you get that signal. So I typically require a pullback to get in here. All right, nonetheless, there are people that love this and jump right in. You can see what happens here. The market climbs nicely. Okay. Let me look at questions, and I'm gonna change topics for a moment. Do you use anything as the directional bias when you trade on the first hour? Yes, Peter. I look at, when I come into the day, I look at a 30-minute chart and I look at a 4-minute chart, and I want to understand what are those showing me. So in fact, one of the things you can do is watch the daily video that I put out. Let me find it for you here. If you go to daily videos here, or you can subscribe and I'll email it to you. And I talk about how I read the market for that session. All right, using the tools we're describing here. Okay. And in fact, this was Wednesday, so you can look at today's daily video, and I'm talking about this exactly, about what the market is showing me or how I'm reading this given the order flow tools that I have. Okay. Other questions? Song. Can you use those indicators on time bars? Well, yes. Yes and no. So we're calculating the time-based bar. I'm sorry, we're calculating the momentum on a time-based bar. Reversal patterns are a range bar deal. That's the way I formally defined it. Okay, because I want to see what price is doing. A time-based bar is showing me more about time, more information about time than about price. A range bar is showing me more about price than about time. Okay. I actually, Carl, I just answered that question. There's much less noise in a range bar, Carl. All right, let's switch topics for just a moment, okay? And we will come back to this. By the way, the other, actually, let's look at the inverse of this. So we talked about a price reversal pattern here followed by momentum, okay? You get the same thing here, actually. There's a reversal pattern right there and momentum short. It's actually stronger on that bar. So let me explain why that's the case. All right. This is a 3-bar reversal right here. Okay. So price is turned enough. Now the price is going sideways. So when you think about it, you can't really reverse if you don't have a direction. I can't be reversing short if I'm not going up. Right? I can't go down if I'm not going up. But the market's going sideways here, so this is more of an entry at the edge of a consolidation range. But I require the same thing, a reversal pattern. Okay, that's right there, and I've already gone momentum short. I'm already seeing selling strength. All right, and you pull back here. I actually really like this. I need to see a pullback when it's a 3-bar reversal because I feel like I get that so often that when I chase the market after this signal, I end up getting stopped out on a wiggle. So because of that, I require a pullback. All right, it gives me a pullback here. I tend to like it deeper, but what I really like about this is if you look at that bar, you've lost the short momentum there. Okay. And then on the next bar, it reasserts itself. So when this bar goes bright red, that's the time to short this, in my view. I have a reversal pattern. I retraced. I lost momentum. It's neutral now. But here, I see the sellers reasserting themselves. That's a clean short right there. I like that. There's a similar logic here, actually, in this long right there. I've turned. I've got a 3-bar reversal. It's really a strong turn too, right? There's a lot of distance from the low to the top of that 3rd bar. Big buying, okay? I come into here and I pull back, hardly at all, 11 ticks, and then I lose my long momentum. So it goes neutral, but there I see the buyers stepping in again. Getting in on that bar makes really good sense to me. Okay, just logically, it makes sense to do that. You can see the ebb and the flow is what's happening. And not just the ebb and the flow of price, but the ebb and the flow of the aggressiveness of one side over the other. Okay, so if you think about the way the market moves, you know, advance, pull back, or decline, retrace, decline, retrace. I always think of the waves at the beach. The water comes in and it goes out. It comes in and it goes out. The ebb and the flow. And so when I'm using this, what I see here in this case, right there, I see the ebb and now the flow again. Same thing here. I see it ebb and now the flow again. And so in terms of a momentum signal, that's really strong. I really like that. That makes a lot of sense to me logically. It's very easy for me to take that trade intellectually. Okay, because I can, looking underneath what's happening, looking into the order flow, I can see the buyers ebbing back and stepping back in. It's when they step back in that I'm ready to go now. Okay. Now I used a key word there, which is intellectually. So we're going to switch tracks for a moment. and talk about a few other things. If I can find my presentation. Okay, so we were here. If you're going to trade, there's three things you need to be successful as a trader. The first is related to your biology. The second is treating your trading like a business. And the third is analysis. The technical analysis, the thing we've been discussing so far today, is an aspect of technical analysis. It's an important skill that you need, but it is not the only skill. And in fact, it's the least important of the three. And the problem is, the reason that so many people struggle is that they only focus on analysis. They don't focus on anything else. Or, whoops, I'm sorry, we'll move the mouse wrong. Or they'll have a problem that's really a biology issue or a business issue, but they'll try to solve it with a technical analysis solution. So you're solving the wrong kind of problem, okay? And so what you have to think about as a trader is that, look, when you're trading, who's on the other side of your trade? Every trade has a buyer and a seller. If you're buying, someone's selling to you. Why is that person selling to you? This is a question you should be asking yourself. What do they know that you don't? What do they think that you're not thinking about? To me, answering this question is critical. And one of the reasons I was so attracted to the order flow concept and looking at it in terms of who's being aggressive and who's being conservative and what is price doing is because it helps me understand who's on the other side of my trade. When you see momentum short but the price is not going down, that's people who've gotten excited about shorting the market and they're about to get whacked. Okay, that's the absorption signal. See it right here, this green triangle right there, absorption long. I see a lot of selling, but I see the buyers absorbing all of it. All right, you see a similar thing here and here. Absorption short. A lot of buying, but the sellers are absorbing. A lot of buying, the sellers are absorbing. I really like that signal, actually. The market is falling. It's trying to retrace, but the sellers are stepping in, absorbing all the buying. It didn't go very far this time, unfortunately. Okay, so who's on the other side of your trade is the question. Somehow I screwed this up just a moment. Who's on the other side? And the problem is, keep this in mind, the person on the other side of the trade is probably this guy. You're not another jaguar, or maybe that's a leopard. You're a gazelle. Okay, the professional traders, the traders with a lot of capital and a lot of skill are likely the ones on the other side of your trade, and you need to pay attention because they're actively trying to trick you. The person on the other side of your trade wants your money in the same way that you want theirs. Someone's going to win and someone's going to lose. And so your mindset in trading needs to be, I have to be careful. Because the person on the other side of there's a human on the other side of this trade, and he wants my money. The problem that we have as humans is that we react to risk. We react to a threat in a very specific way. When someone tries to hit you or harm you, your body responds to that. It's called the fight or flight syndrome. This is a physiological response. You have zero control over it. And it applies to trading because when we put money at risk, our body doesn't make a distinction between the kinds of threats that we encounter. It treats that threat to your money, to your livelihood, to your ego, as the same as if someone was physically trying to harm you. And so you feel that fear, that anxiety, that doubt. On the flip side, you feel excitement and euphoria as well. and that impacts your ability to make a good decision. And so one of the things that you have to do if you want to be successful as a trader is deal with this problem. It is actually, in my opinion, the most important thing to deal with. So a lot of people call this, trading psychology. I think that's a poor choice of terms. Okay, that conjures up images of you sitting on a couch talking to a professional about your problems. Okay, that's not the problem. You're not broken. There isn't a flaw in your thinking process. You're responding the way nature intended you to respond to a threat. It's just that in this case, that response is inappropriate. It's counter to your success, and you have to deal with it. And you can't just pay it lip service. You can't just go, I've got this great trading system. Oh, and by the way, you need to deal with trading psychology. That's not going to work. You need an actual plan to address this problem. Okay? Now, we're talking about things like fear, anxiety when you're trying to make a trade. Should I do this or shouldn't I? Excitement. Oh my gosh, the market is running my direction. It's going to go this way forever. Greed, euphoria. All right? Many of us have experienced all of these things. All right? The case where the market is just screaming in your direction and you think it's going to go that way forever, and then you don't get out when you should and you give it all back, or even worse, take a loss. All right, everyone feels the fear, fear of pulling that trigger to take the trade because you're worried about losing money. All of these things are very normal, very natural response, but you have to deal with it. Okay, and you need a method or a mechanism to deal with it. All right, now it actually is not that unusual. This problem, solving this problem, is many walks of life have this issue. And what you have to recognize is that your body is a biological system. And what we have to do is we want to retrain it to respond in a different way. And once you do that, when it comes time, you're looking at the market, you're able to do it objectively. You're able to do it without dealing with this fear stimulation. Okay? So, 2 examples. The first, the armed forces. Very obvious case where soldiers are going to be put in situations where their lives are in danger. Clearly a time to be afraid. And how does the armed forces, how does the Army, the Navy, Air Force, Marines, how do they deal with this? How do they teach their soldiers to I don't want to say not be afraid, but to respond in a more appropriate manner? Do you think they give them a book on psychology, or have them sit down with a psychologist and talk it out? No, that's not what they do. What they do is they put a large man with no neck in front of you who screams at you until you always do what you're supposed to do every single time without fail. That's what they do. Drop and give me 20 maggot. Over and over and over again. Field strip this rifle. Do it again. Do it again. Do it blindfolded. Wake you up at 3 o'clock in the morning in the dead of night and give you a rifle. Field strip this. And you get to a point where you just do it. You're just automatic. Over and over and over again. Repetition is the way that you retrain your body. Okay. Another example that's hitting a little bit more close to home, at least for me, is the martial arts. So I'm a martial artist. I have a black belt. I was an instructor for many years, and we have this exact problem where we need to deal with helping our students understand how to deal with fear. Because when someone's trying to hit you or kick you or harm you, you naturally feel that fear. Your body issues adrenaline. And you can use that adrenaline to have the strength of 10 men, or freeze every muscle in your body, or run away. None of those responses are appropriate. And so what we do is we teach you. We're going to practice this attack. Someone's going to try to punch you in the face. They're going to do it this way. This is the defense you're going to use. Now practice that. And then I'll have 10 people attack you 10 times each side. And over the course of 20 minutes, you'll get 200 looks at that attack. Do that 3 times a week for 4 weeks, and you will not feel fear when someone tries to hit you like that. Okay? Now, here's our problem. We cannot set up that kind of exercise in trading because it's not a controlled environment. If you're working on a simulator, you're not feeling any fear because there's nothing at risk. So the simulator, in my view, the simulator is only useful to help you learn your technical approach, and as soon as you learn it, you got to get off of it because you're not engaging your body. You're not engaging that physiological response that is the most important thing that you have to overcome. Our dilemma is because it's not a controlled environment, it's a horribly inefficient process to learn and to teach because you have to sit in live market conditions with real money and wait for a trade. Not do anything when you don't have a trade, which is really hard, and then when you have a trade, execute. And you may only get a couple looks at that basket a day, 10 times a week. It's going to take a long time to get enough reps, enough repetition to teach yourself, to retrain your body. This is why it takes a long time to learn, because it takes a long time to retrain a biological system, and we can't control it in a way that allows us to force that response in your body, not like we can in the martial arts. Okay, this is the big problem you solve, and really this is the way that the service that I provide is designed to address this exact problem. I don't care what technical method you use. I've got a lot of really good tools, and I use them in a certain way. A lot of my members don't use them that way. They've got their own methods, and they like, they like, say, the momentum signal. And maybe they're a market profile person, and when they get to one of their levels, then they look at it and go, okay, give me a momentum signal, and now I'm going to get in. That kind of thing. And what I'm doing is showing you every day, this is how I approach the market. Do I have a trade? I didn't have a trade this morning. I wanted to take a trade. I'm doing a webinar today. It would be great if I showed a nice profitable trade. Wouldn't that be awesome? That's extra pressure I'm putting myself under, but I didn't get a signal in time. Try running a live trading with a bunch of people watching. See if you don't feel a little extra pressure. Oh dear. Okay. This is the big problem you've got to solve. And the way to do it is know what you're supposed to do and only do that. Okay. And we are running out of time, so I'm going to skip this portion here where we talk about trading as a business. Let's get back to the chart and let me get to questions, and then we'll wrap it up here. Where did the chart go? And we need to send out a link. If you like kind of what you heard technically about order flow and momentum, not this Saturday, but next Saturday, I'll give a free 2-hour tutorial where we're going to take these different concepts and talk about them in the exact same kind of detail along with the trade setups that I use. All right, so that's the wave volume you see here on the bottom, the reversal patterns, the momentum, big buying and big selling, and absorption. Okay, this little purple triangle here. Actually, I think there was one the other day, wasn't there? All right, no, it's today. Here, I love this signal right here. This triangle right here. That means no interest. So I'm looking at the wave volume here and seeing that. Look, I don't have very many sellers anymore compared to what I had last time. Even less than the response. So there's no more selling, no interest, no more sellers. So that really adds credence to this, the fact that this market is might head higher. All right, let me look at questions here. It is hard to detect absorbing. Carlos, actually, it's not that hard. I'll show you what I'm doing and how I'm doing it, okay? It is, well, I guess I could say it. Everything's hard when you don't know how, right? Once you know how, it's not hard anymore. So that's not fair of me to say that. And the method that I'm using here is fairly tricky because to understand absorption, you have to understand how much buying or selling is going on. So we're using the same concept of understanding, well, how much aggressive selling am I seeing and what's price doing? If price is not going down, that's absorption. Okay, so the key things there are understanding where are the thresholds to represent a lot of aggressive selling versus just noise, right? So I've got all that figured out. Or rather, I've defined what I use, I should say. So Julio is asking, was a comment on the first and second hour being typically the most active referring to ES and NQ? And if so, would that be equivalent to this for ZB? Julio, every single market I've ever looked at, the most opportunity, the most movement is in the first hour, every single one. Okay, it's not that hard to set up your chart to do it. It'd be a good exercise for you to learn your charting software and to see the range of the first hour is what you're looking for compared to the range in the next hour. Is accumulated volume an existing study with Infinite Series? So Daniel, I think you're asking about this here. This is not a custom study here. The wave volume. This is built into Sierra Chart. It's truly an awesome piece of trading software. I don't say that lightly. All right, I was a TradeStation user for many, many years, and Patrick dragged me kicking and screaming over to Sierra Chart, and I've just never looked back. I am doing things in Sierra Chart I could not do in TradeStation without just huge amounts of effort, and I can't do it at all in like NinjaTrader. But anyway, wave volume is built in. It's called zigzag cumulative volume is the name of this study. This is the zigzag here, these dashed lines. What I've done is then taken that information and coded signals based upon what I'm seeing in this volume. So this no interest signal is looking at the pattern of volume in the waves. Same thing with divergence. Divergence, that's a divergence short signal right there. Looking at the price and the wave volume, and divergence is one of my favorite signals. Finding, I'm setting new highs on lower volume, setting new lows on lower volume, looking for the turn, very good turn signal. Do I code my signals myself? I used to, Patrick. I don't have time anymore. I'm a computer science person by training, so it's something I built, yes. Other questions? Does the absorption triangle appear in real time? Oh, great question, Tim. Yes. So actually, let's discuss that for a moment, because it's really important to understand how does the market look in real time versus how does it look statically after the fact. So if it's a wave volume signal, then it doesn't plot until the wave completes, because you don't know that the wave is complete. So these signals don't plot till the wave completes. The wave does not complete until the market, in this case, the market has moved 20 ticks off of this level. All right, so I'm going to get this no interest signal on that bar right there. Okay, there's generally plenty of time, not always, but generally. All others plot in real time, every tick for tick. So absorption, when I see it, as soon as the system sees it, it plots it. The momentum in particular, tick for tick, and a lot of my entries that use these bright outline bars they're really designed to be entered on that bar when it goes bright. The idea is to get in as the market is taking off, and it allows you to use a pretty tight stop. Some of it depends upon your personality as a trader. Okay, some people, like if you look at this right here, that's a pullback. As soon as that bar goes bright, you can get in at the market if you want and set your stop below the low. Others, I tend to like to do this. I'll look back and go, well, I'd really like my stop at 99.75, so I'll bid for 02.25, and I might get filled. In this case, it gets touched. I may miss it. There's a personality issue there, because if I go in at the market, then I get stopped on a wiggle. I just hate that more than anything. I'd rather miss the trade than get it right but get stopped on a wiggle. So that's a function of my trading personality. Something important for you to understand and learn and it'll change the way you set up your trading plan. Why NQ? Because my members voted for it when I said I'm going to trade an index. The reason NQ is that you can use a 10-tick stop and only risk $50. ES, the problem with the ES, in my opinion, okay, is that there aren't enough ticks per point, and so it's harder to get fills that you like. So I've noticed that just in general, but the bigger issue is that the ES, the best traders in the world are trading the ES. It has the most traps for newer traders, for less well-capitalized traders. And so in my opinion, you should stay away from the ES if you're new. I think it's ironic that it's the market that most people start with. Do you compare wave volumes to previous session? No, I don't, Larry. So Larry's asking if I look at the wave volume from the opening wave here and compare it to yesterday's opening wave. No, I don't. That's actually a fairly interesting idea. No, Edward, these studies are not written for NinjaTrader. All right, I need to post into the chat a link to the tutorial. So I'm going to do that, but first, if you just went to the website, you could go to webinars and view the calendar, and it would be right there. Okay, that's next Saturday. And we will spend the bulk of our time on technical analysis related to order flow, wave volume, and momentum. So similar to like the first half of our session today. All right. I need to find the chat. Is there any way to use the DOM to know order flow? Only with, if you try to use the DOM, then really what you're doing is what's called tape reading. And I would consider this very, very advanced, very difficult to learn, even harder to teach. And you're going to just burn your eyeballs out. One of the things just notice me doing is look at how simple this is visually. Okay, there's a lot of information in here that's very easily understood once you know the symbols, right? I don't have to go look at this chart, and I don't have to go look at the other way, this chart here. Some people do order flow and they're actually looking at this chart, watching these numbers go up and down, and really difficult to do. To me, you're just really, it's too hard. I can't do it. Okay, I still can't find the chat. There's the questions. Patrick, can you post that in the chat? I lost the little chat window.
I've put it out there. That's okay. I've put it out there a couple of times. Does everybody see?
Okay, thank you.
Does everybody see that link that I put that in the chat box? I put it in there twice. I want to make sure you saw it. Okay. Yeah, it looks like.
All right. So, Patrick, excuse me. Let me just answer this one last question because I didn't do this, and I should. I'm a terrible salesman. So you get Sierra DLL with monthly membership. Can you buy it outright? So yeah, I kind of forgot to mention what I actually do. So what I do is I didn't want to be one of those guys that required you to spend thousands of dollars up front to do this. All right. I went through that myself with a couple people and ended up not liking what they did and was out a lot of money. So what I do is I charge $95 a month, and that includes everything, including the custom studies and all the charts, all the tutorials, and the access to the live trading room. So there's not a big upfront cost. All right, as soon as you sign up, even if you sign up for a trial, there's a trial for 7 days, it costs $7. As soon as you sign up for a trial, you remember, you get everything you want, everything that I have, all right? There's 20 or 30 hours of tutorial material. And that's it, there's just one price. I don't sell anything else, and you won't get another call from me next week with the next big thing that you absolutely must buy. I don't do that, okay? There's just one price, period. And the way it works is, and so some people's response to that is, well, that's great, but I don't want to have to pay you $95 forever. You don't, all right? If you're with me for a year, the license to the custom studies converts to lifetime, and you're on your way, okay? So it's kind of set up to try to be as easy to start as possible and to address sort of all those concerns that you have that are related to very well-founded skepticism that you have about trying to learn how to trade. I've been through that process. I understand it. That's why it's set up that way. Can I trade CL and YM with your system? Well, I trade CL every day, so that's yes. I have members who trade YM. Keep in mind that we're talking about more than a system, okay? In fact, I don't even like the term system. What I'm doing is showing, by using the order flow, I'm showing you how to read what's happening in the market, and based upon that, you can take an action. It's more important that you read it well than you have some mechanical system that you're trying to follow, okay? The problem with the system is that there's another person on the other side of your trade, and as soon as they understand sort of what you're doing on your side, they're going to game it, all right? So I'm going to try to go back one more step and understand what is happening in the market. What do I see happening? And you can see it with the order flow. Because of the order flow, you can see it, all right? You just have to learn to read it, all right? I put a daily video out every day. You can subscribe to that, where I talk about what I read based upon the order flow. You can go look at today's. It's already out. Is there any way this would be applicable to stocks or only works for futures? No, Brad, it works for anything that trades, all right? Because we're talking about, we're not trading a market. We're trading the other traders. It doesn't matter what the market is. We're trading the other traders. That's what we're doing. I'm not trading the NASDAQ. I'm trading the traders who are trading the NASDAQ. That's what I'm doing. It's a mindset change. Don't forget about the other person on the other side of the trade. I just cannot emphasize that enough. There is another person on the other side. Who is that person? What are they thinking? Did you find a person who's being foolish? Take that trade. Is that other person a professional? Be careful. Okay? All right. I think are we done? If the link has gone out and there's no more questions, can it be used for Forex? Well, if you mean Forex like the modern day bucket shops, no, because there's no volume in Forex. But you can trade currencies on a regulated exchange, which is what you should be doing, frankly. You can trade the euro. That's the EUR/USD on the regulated exchange, and you get volume with that, and all this works just the same. What is your average hold time? Oh, there's an interesting question. Oh, you're welcome, Daniel. Average hold time, I don't know. I tend to hold is for longer than most because I'm aiming for the major move of the day. So my default target on the NASDAQ is 10 points. All right. I risk 10, sometimes 15 ticks to make 10 points. So if it takes a while to get there, then it takes a while to get there. What are the trading hours? I start about 5:45 Pacific. It's 15 minutes before the oil opens, and I trade. So the way this works is I trade the first hour of the stock market, and then you're supposed to read the next hour on your own. So it's guided trading for an hour, and then you do your own read the next hour, and then watch the video to see what I saw. All right, guided trading for an hour, on your own for an hour. We do it this way so that I'm not your crutch. I don't want to, my goal is to make you an independent trader. This is a martial arts concept. The best teachers in the world make their students better than themselves. My goal is to make you better than me. I can't do that if you're constantly relying on me and only doing what I do. All right, that's not what we're trying to do here. You have to learn to trade on your own. So we trade for an hour with me, then you trade for an hour on your own, or just watch the market, read the market for an hour, and then you're done for the day. Beyond that, the opportunity drops dramatically. Come back the next day. You can listen to live to my recap of what happened the previous day, how I read the market, or you can just watch the video. Do we get software with the indicators when we subscribe? I don't know how to pronounce your name. I'm going to call you Tej. All of, I don't provide Sierra chart. You have to get that from the Infinity guys. But everything else, yes. Everything you see, your charts will look exactly like mine. Exactly. Okay, you get Sierra chart from the Infinity guys. Do you have recording for the day? Samsung, which day are you talking about? Oh, you're welcome, Charles. No. 15 ticks. 10 ticks, 2.5 points, sometimes 15, usually not, but sometimes. And I'm aiming for 40 ticks on the NASDAQ. So I'll risk 10 to make 40. It's a 1 to 4 risk to reward ratio. No, I don't record the whole session for training, no. Abby is asking about different chart types. I use a range bar chart, okay? Reversal patterns sort of require that. The concept behind the reversal pattern requires a range bar. Some of the concepts for order flow require the range bar, okay? Which you come to the tutorial and you'll understand why. So other chart types I haven't tried, all right? But conceptually, they're not going to work because the order flow is important, not just how much volume, but where is it happening? So like the big buying and big selling signals are looking at the volume in only part of the bar. Like if this is a bar, a range bar, and the market's going up, it takes volume at the top of that bar for the market to go higher. So in terms of looking for long strength, I don't care what happens at the bottom of the bar. I don't care what happens down here. I only care what happens at the top. This is a very unusual concept that I don't see anyone else doing. All right, and so that requires a range bar because I have to define the range. Okay. Just watched you slaying the dragon. That's interesting. I don't know what that means. I study a Japanese style of karate called Shito-ryu. All right. Patrick, are we done here? You going to step in and close us down?
Yeah, I think.
Thank you very much, everyone, for attending. I appreciate your time.
Yeah, definitely. That is that was an excellent presentation, and I just want to make a note here to everybody who's listening, especially if you're a customer of mine. You have to, after listening to that, everybody here has understanding now of Shane's has a very cerebral way of looking at this. It's a contextual and nuanced method, but it helps to have him break it down in plain English like this. It really does. Every time we haven't done one of these events in a while, but I'm glad we did this one because it sort of reset a little bit of my thinking as well. And there's some things that I know that some of my customers are struggling with that I've already gained from this. So Shane, I do appreciate you coming and doing this event. This was especially there's not that many events that take place after the market that are this interesting. Usually we have to do something during live hours to have some fun, but this was a really great presentation. So I want to say thank you again sincerely for taking the time to do it. And we got a lot of good feedback already from the questions, I can tell. So Shane, man, thank you for doing that. We're going to put this, we'll have it recorded, everybody. We did record it. It'll be up on YouTube probably by midday tomorrow. So if you guys don't subscribe to our YouTube channel, subscribe to it. You'll get a notification on your phone or your email as soon as we put the video up there. And anytime we do anything else, feel free to do that. Shane, what time is your presentation on the following Saturday?
It's we'll start at 10 o'clock Pacific.
10 Pacific, so not this Saturday, the following
next
Saturday.
Saturday.
10 Pacific.
The 18th.
Right, the 18th. So that's 12 Central, 1 o'clock in the afternoon, New York time. Okay?
Yes, that's correct.
Okay, good deal. Well, fantastic. I mean, again, thank you, Shane, for taking the time to do this. I'm gonna have to take the screen back because I have to read the risk stuff one more time. But I really do appreciate it. That was.
Don't take the screen back just yet. One more thing.
Okay. Yeah, I forgot about.
I want to leave you with this visual. You are not the big guy. You're that little guy. And in fact, a better representation would be about 100 little guys and 10 or 15 big guys, and you're one of those little guys. Okay, remember this. All right, who's on the other side of your trade? More than anything else, think about that question. You can really help yourself if you stop trying to make money and start just trying to take advantage of opportunity. Okay, and one way to change your mental space there is stop looking at your trading and look at the profit and loss result and ask yourself, how many losses did I avoid today? Because I'm thinking about who's on the other side. Thank you very much for your time today. Good luck.
Excellent. Thank you, Shane. Appreciate it, man. Thanks again. And everybody, I want to mention too also, Shane's service is very modestly priced. There's no denying that. So you're not looking at a huge commitment financially to give this a whirl. This is the type of thing where if I talk to a customer and I feel like someone's, feeling down or just needs a pick me up or just needs to reset, this is one of the reasons why I'm not afraid to put Shane in front of my customers or prospective customers, because of the kinds of presentations he's giving like this, and the fact that the pricing is modest to the point where you're not emptying your trading account to participate. So thank you again for doing that. I'm going to take the screen back, Shane. Appreciate it. We'll have the recording up soon. Thank you again for everybody for coming and sticking with us here. We'll be in touch again soon. So thank you again. See you, Shane.
Take care.
All right, folks, thank you so much for coming. I do appreciate it very much. Thanks for the great questions. Really great questions. And thanks, Shane, for answering as many as he could as well. We got a lot of people in the room. Folks, we'll see you next time. Trading futures, options on futures, and retail off-exchange foreign currency transactions involves substantial risk of loss and is not suitable for all investors. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations are subject to change at any time. Past performance is not indicative of future results. Really great feedback, guys. Thank you again. We'll see you next time. Take care.